How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. We also got to put in the disclaimer. I'm not a financial advisor and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. So today we're going to be talking about Senseonics. It's been a while since we last spoke about it, so I want to hit you guys up with an update. But before we get started, of course, we got to go through the agenda. If you are new to this channel, just to let you know, we also have timestamps down below in the description. So the first thing we're going to be going over is the recent financial results. How was it looking? I'm going to be giving you guys my thoughts on it, and I think it's very important for investors to know. When that is done, then we're going to be doing a technical analysis. We're going to be taking a look at the recent price action. What levels should we actually buy it at? Where are some areas of resistance? What is the potential actually looking like for Senseonics? And then we're going to be taking a look at the recent institutional ownership and as well as the short interest information. Why is this important? We want to see, are institutions loading up on shares or are they selling their shares? And then we want to know, what is the overall market sentiment? How are they feeling about Senseonics overall in general? And then when all of that is done, I'll be giving you guys my final thoughts. So let's get to it. So we're on businesswire.com and we're going to take a look at the recent financial results for Senseonic Holdings. So this is taking into consideration Q1 of 2021. So SENS, a medical technology company focused on the development and commercialization of long-term implantable continuous glucose monitoring systems for people with diabetes, today reported financial results for the quarter ended March 31st, 2021. So we're going to go through it. I will be including a link in the description as well in case anyone who wants to read it fully, but we're going to go over what investors need to know. Advanced commercial, a collaboration with Ascensia Diabetes Care. Ascensia assumed full commercialization for the eversense CGM in the US on April 1st, 2021, and for the eversense XL CGM in select European markets on February the 1st, 2021. Ascensia completed the hiring and training of 25 eversense sales professionals in the US and additional support roles including inside sales, clinical support, market access, and customer care professionals, in addition to the existing commercial organization of over 250 professionals in Europe countries active with eversense. Ascensia launched a US direct-to-consumer advertising campaign for eversense in early Q2. We are very pleased with our start to 2021, including the transfer of worldwide eversense commercial activity to Ascensia. In the US, there are now 25 sales representatives trained and actively calling on existing eversense accounts and targeting top insulin prescribers to further drive adoption of our CGM system, said Tim Goodnow, PhD President and Chief Executive Officer of Senseonics. As part of their U.S. commercial efforts, Ascensia has launched a direct-to-consumer ad campaign aimed at raising awareness of the differentiating capabilities and benefits of eversense that in most cases offered a comparable annual copay to patients. Other choices, we are excited that this collaboration enables further patient access to the only long-term implantable CGM solution with a sensor that lasts for months, not days. So to summarize their collaboration with Ascensia Diabetes Care, it seems like things are going in the right direction. They have salespeople in place. They also make sure that they're also offering customer care professionals and as well as clinical support for any questions and as well as concerns. They're also seeing some success and penetration within the market as well, and they're definitely looking at making sure they can further cement themselves in the US. And of course, they're seeing some success in Europe as well with the eversense product. So now let's take a look at the first quarter 2021 results. Total revenue for the quarter was $2.85 million compared to $0.04 million for the first quarter of 2020. US revenue was $0.31 million and revenue outside of the US was $2.53 million. So just to let you guys know what this is actually looking like, they are seeing some success more so outside of the US. First quarter 2021 gross profit increased by $20.16 million year over year to $2.53 million. The positive gross margin in the quarter was primarily due to the ability to fill resupply orders with existing written off inventory, as existing patient reinsertion rates were above the expectations established in the first quarter of 2020 amid the onset of the COVID-19 pandemic. So we're seeing some improvements in gross profit, which is definitely good to see, and we see that they're seeing some recovery from afterwards from the pandemic. Also taking into consideration in regards to total revenues, we're seeing that, you know what, they're doing well outside of the US, but I do believe when the eversense gets approved in regards to their 180-day device, and as well as that 365-day device that we're really looking forward to, I could see these numbers improve. So we want to see improvements in more earning reports. Now, for the third one, first quarter 2021 sales and marketing expenses decreased by $9.53 million year over year to $1.61 million. The decrease was primarily due to the strategic changes in our go-to-market strategy with the Ascensia global collaboration. So this is solid to see. I'll be very curious to see what this looks like for the next report. First quarter 2021 research and development expenses decreased by $2.11 million year over year to $5.26 million. The decrease was primarily driven by lower clinical study costs and personnel related expenses. Part of the reasons why I actually see this was the case is due to COVID, the pandemic itself. First quarter 2021 general and administrative expenses decreased by $0.72 million year over year to $4.97 million. The decrease was primarily due to a decrease in personnel related costs. Net loss was $249.51 million or 0.68 cents per share in the first quarter of 2021 compared to $42.59 million of 21 cents per share in the first quarter of 2020. Net loss increased by $206.92 million due to a $239.44 million increase to other expenses primarily related to non-cash accounting charges resulting from the accounting for embedded derivatives related to certain of the company's financings, partially offset by a $32.52 million decrease in loss from operations. As of March 31st, 2021, cash and cash equivalents were $178.6 million and outstanding indebtedness was $110.6 million. So as far as overall for the financial results, it was great to see they were able to beat revenues, see improvements when it came to their profit in regards to gross profit margin, and also taking a look at the fact they were able to bring down costs for the personnel and as well as for clinical studies. But I do believe that this is in regards to the pandemic. So I do see this increasing when things do go back to normal. So now their 2021 financial outlook for the rest of the year, the company continues to expect that the global net revenue to Senseonics for the full year 2021 is expected to be in the range of $12 million to $15 million. So we're going to be doing a technical analysis for Senseonics. So let's see how it performed on Friday. So it ended up closing the day at $1.92, being up 12.28% on the day. On the low, it tested $1.73, and then on the high, testing $1.95. So what we want to take a look at are areas of support, and we can definitely see some solid support here right around this $1.70 level. You can call it 68 cents if you like, but just taking this into consideration, if the stock does decide to pull back, these are areas you'd want to look out for if you're thinking about getting into a starter position. Another area to take notice of, just in case it decides to pull back even further or there's more volatility inside the market, you want to see how well it would hold up at $1.50. If that $1.50 level did ever end up breaking, then the next level is right here around $1. I'm just letting you guys know so you're prepared and you're not surprised. And if you believe in the long-term prospects, there's definitely a lot of upside here. But for the most part, as far as what this chart is telling us, it is below the 200-day. It's also below the 100-day, but it is riding on some momentum above our 21-day EMA. So we're seeing a little bit of a reversal on a bullish trend, even though it was quite bearish for quite some time. So what I want to see this $1.70 level actually hold itself up and see us come back to reclaiming the 100-day right over here at $1.98. So seeing that $2 level. I feel like this $2 area is going to be an area of resistance, but if we're able to actually get past it, we could definitely see a move going into around the 215s and then seeing a level getting up to the 230s. I think that would show some strong price action. As we know, the 52-week high is right here around $5.53. So taking all that into consideration, getting more news, more updates, seeing a great earnings report for the next one, or just seeing improvements overall in general and over a consistent period, I could see a lot of upside for Senseonics. We've talked about it quite some time, and that's part of the reasons why I wanted to bring it back on the radar. So we're going to be taking a look at the institutional ownership and as well as the short interest information for Senseonics. So as we scroll down on the page, green rows indicate new positions while red rows indicate closed positions. So we could see on the 14th there is definitely a lot of activity for sensstock, and it is bullish for the most part. We do have two institutions that closed out, which is NEA Management going full out, and we also as well have Magnolia Capital Advisors closing fully out as well. But when we take a look at institutions who have been loading, we see the Vanguard Group right over here, shares change. They've increased their position by just under 60% and having a total of 11.4 million shares. We also see Wolverine Trading going in with a heavy position here around 209,000 shares. And we also see LPL Financial getting in as well. And this is not even taken into consideration even if we scroll further back. But for the most part, as you can see, and we can see this from the 12th, 13th, 14th, there's definitely a lot of bullish activity we're seeing amongst institution and sensstock. When we take a look at the short interest information, short volume ratio stands at 26%, which is end of the day Friday. So there's definitely some short squeeze potential here in Senseonics. As we scroll down on the page, short shares availability stands at 450,000. And as far as the short ball free rate stands at 2.82%. When we take a look at the history of the short volume ratio, it is definitely used to being above 21% overall in general. It had some times where it was below that, but for the most part, on average, it is above 21%. So what does this mean? So as far as the overall market sentiment towards Senseonics, there's many who believe, well, you know what? It is overpriced. It shouldn't be priced where it's at currently. So one of the things we need to take into consideration, if there's any news or there's any updates, or we end up getting some strong movements in price action with increased volume, then we could see a lot of room going to the upside. We already know what the 52-week high is, so that's just one thing I want you guys to be aware of and to understand. So for my final thoughts for Senseonics, I definitely do like some of the positives we saw in the earnings report. What I want to see is an increase in revenue and as well as gross profit margins. I feel this is key, and we need to see this on a consistent basis. We already know there's a lot of promise overall for this company, especially if they're able to get that 365-day device approved by the FDA, then this stock is definitely going to be going places. Right now, we're waiting on more information in regards to the 180-day in the US, but we see that it's doing fairly well in the European markets or outside the US overall in general. As far as their collaboration with Ascensia, it is great to see that, you know what, it's looking like to be a profitable relationship. So what I want to see overall in general is more strength, more consistency from Senseonics, and it was great to see that they made some significant improvements. Another thing to also understand, institutions are also purchasing shares as well. And as far as the overall sentiment from the market, when we take a look at the short interest information, it is up there. So it does give us some short squeeze potential, but there is many institutions, hedge funds that are looking at this stock and saying, well, you know what, we think it's overvalued looking at it from the current price. So if you're thinking about getting into a position, whether you want to average up or average down, make sure you do your homework and your due diligence along with watching this video so you can come up with the right decision that's best for you. Hope you guys enjoyed this video, and we'll be talking real soon.